or more obvious to me in the last 4 or 5 years is that there is just way too much money in the world. Went to Bitcoin at some point in time, and then it was taken out of Bitcoin, and then there were the NFTs and all the money. I mean, yeah, digital pixels people were buying. The world has become so unstable that all of the risk-bearing currencies, it's stupid to bet on them. I mean, look at Canadian dollar. It's like at the all-time, you historically all-time low, and then breaking some more. Same goes for Australian dollar. Same goes for New Zealand dollar. The world after COVID is a very different world because before COVID, people had a decent living. I mean, I knew families where only one person used to work, and he was able to support an entire family, have a house, pay for the car, pay for the petrol, and everything. And what I see now in the last 2 years is even everybody's working non-stop and everybody is struggling financially. My own personal opinion is there is no EA or machine learned model or AI generated model that can trade for you always, forever, until the end of times, happy ever after. That just doesn't happen. Okay.
Yeah, it's on now.
Yeah.
Oh, first time putting a face to the name as well.
I was busy in like the traveling and family stuff.
I think it's just going to be the three of us tonight.
Oh, really?
Actually, I hadn't realized that the call was supposed to be at 6:30 my time. I was expecting it to be 5:30. Good thing you mentioned because I was actually in Reading, and I booked a train back so that I could reach by 5:30. And then I realized that due to daylight saving changes, now the call is going to be at 6:30. So then I took a half an hour nap.
Anyways, to start, and we have Kenley on the call as well. I mean, somebody who has joined for the first time, or
Hello, I'm walking on a trail today, so it's I don't know how my audio is coming in, but hello to everyone.
hey, hello. And I mean, don't worry about your audio because you have three Indian Pakistani guys on the call. So in between our abul dabul, you're probably gonna be better off with a bad microphone.
Yeah, somebody even posted under my video, bro, please fix your accent.
Yeah.
And I'm like, okay, I'm getting the first taste of online trailing, so I enjoyed it.
Yeah. And where are you from, Kenley?
I'm in the U.S. I'm in Washington State.
Oh, okay. And you guys, because I mean, I get a lot of comments from people in the United States that the MetaTrader 5 is not available for trading in US and things like those. I mean, what's the trading condition in the US?
In the U.S. with regulated brokers, yeah, it's generally MetaTrader 4 for the most part. And their rules, like there's first in, first out, and there's no hedging. The rules are a bit different here with the NFA and CFTC.
Which is always a bit funny for me because all of these regulatory bodies, they normally try to come up with rules to protect the retail traders. But when you look at the rules that they normally come up, it actually works against the retail traders. So not allowing them to hedge, like how does that help?
They don't make any sense, but that's what you get with lawmakers that don't actually trade, right?
And even, I mean, I was thinking the other day, I mean, this entire leverage reduction from 500 to 30 or even less than that, because on some pairs I've even seen 1 to 10 leverage. Okay, on paper it makes sense. The less leverage you have, the less you would risk. But in retail trading with the brokers, what it does actually is it increases your margin requirement. So if you have an account of when you have an account of 10,000, you still have the same chance of blowing up that $10,000. The only thing is now your margin requirement has become bigger, so you will lose it earlier.
Well, you have to trade with more money in order to make the same amount of profit. But it's interesting.
Yeah, it's interesting. Anyways, I mean, guys, normally we have a few more people on the call who are currently enjoying the nice summer spring day in Brussels and Germany. so they couldn't join because they're on the beach, dragged by their wives and girlfriends. Uh, so I think it's going to be the four of us today. Any particular comments, any questions for me, or because I think, I mean, currently in what I see in my channel is everybody's interested in the new EA that I shared the video on.
I that video, by the way, I thought it was hilarious.
I mean, it was the creation from my daughter because I normally I'm always writing new concepts. I'm always trying different things. I mean, normally, you wake up in the morning, you're taking a shower, and an idea pops in your head, and then you can't wait for the shower to end because you want to get to the computer and start writing it and testing it. And this one, it was particularly funny because once I wrote it and I ran it on USD JPY, and coincidentally I ran it on USD JP5 first, and it went from 1,000 to 9.5 million, which is a back test, so I don't really believe it that much. But what interested me was the fact that the drawdown was very little and the win rate was very high, and it was 2 to 1 raised to reward. So I was quite excited. And my daughter saw it and she came up with the idea of like, okay, let's make a video about you having that, but we're not sure whether you dreamt it. So she's a big fan of Christopher Nolan. So she was like, let's put an Inception story on that, where there's a dream inside a dream inside a dream. So it was a good one. I mean, I enjoyed making that with her. And she's a tough director, though. She's a very tough director. She wants her shot exactly the way she wants it. But on the other end, I mean, it's fun it's fun to connect with your own kids in ways that you didn't think possible before. I mean, never had I thought in my wildest dreams that trading would be something that I could connect with my daughter on.
I've been trying to teach my kids how to trade for years, and it just hasn't stuck yet.
Yeah,
It's a good trailer for the. I'm waiting for the big movie now.
yeah, but that's the funny thing is because now the expectations have gone up so high, and I'm a little bit concerned about sharing it as well because what I normally see in the channel is like people rush to the store, they download this stuff instead of coding. And also, I mean, they're quite reckless in the way that because a lot of people send me emails like, oh, but I downloaded the EA and I've applied it on a real chart and now this is the situation. Like, how did you apply it to a real chart before getting familiar with the settings and, like at least the behavior? I mean, for me, it's like, okay, well, you've met a new girl and you don't even go out 3 or 4 times and you start proposing to her or something. Like, you need to understand the moods of the year as well. And this one, I again also have the concerns, like because I even myself haven't forward tested it. So, but I know as soon as I'll put it up in the store or share the code file, yeah, there will be people who will be jumping with it.
On that note, Baijan, I think last time you and I were speaking to each other, you mentioned that you would probably start doing a forward test, or maybe some of the people in the comment section, did anyone share any results with you as far as forward testing is concerned?
Yeah, I put it on forward test from Monday, and during the first week, I mean, it did trade well. I mean, if you can call it that. So I put it on a demo account, $5,000, and I think it made around $200 in a week, which is what, 4% in a week. And at least, I mean, and again, let's forget about the results. Let's forget about what percentages. But the way it traded was not very different from what I saw in the visual test. So it traded similar to how I would have expected it to trade until Thursday, when I turned off everything because the markets had become way too chaotic with all the tariff shebangs going on in the US.
Yeah.
So with that, like things are going crazy. I mean, euro is shooting up, GBP is shooting up, all the commodity currencies like Australian dollar, New Zealand dollar, CAD, they're dropping like there is no tomorrow. And God knows how this entire tariff shebang is going to continue. So in a way, I tested until Thursday. And then I turned it off because like, okay, well, during these situations, I don't want to trade with any of my EAs. So why would I test this one during that period, which I know I should avoid? But then hopefully by Monday, if things are calm, a little bit more calm, then
Yeah,
I'll.
what I'm thinking is that it's funny or a funny period that you started posting some of these videos on YouTube, and at the same time, Donald Trump came into power, which means that these chaotic periods are going to be way too frequent
Yeah.
and the markets may stay very volatile. So let's see how that pans out.
Yeah, and this is what I was thinking the other day. I mean, before you had to to look look when Jerome Powell comes and says something, you need to be careful, or when there is let's say non-farm payroll data or interest rate decision. Now you have to be on Twitter to see what Elon Musk or Donald Trump say, and they say crazy stuff, and all of a sudden it's like, okay, well, I mean, wasn't trading hard enough already that now you have to wait for the president to post something? That's a funny one.
Yeah, that's very funny.
But anyways, I mean, the first week, I think it traded the way that I wanted it to trade, or it traded the way that I saw it in visual test trading. There are some small things that I do want to tweak, so I'm gonna sit down probably tomorrow if I can find some time to tweak it. By the way, I have also included Vajat your how do you call it, Hearst exponent.
Yeah, yeah.
Yeah, so
Hurst and exponent.
yeah, Hearst index exponent index. So
No, no,
I've
no, no, just Hurst exponent. I don't know why the term index keeps on coming on my
okay,
mouth.
maybe it's just me because I keep
Hurst
saying it.
exponent.
Yeah,
Yeah, probably you
Hearst
said it a
exponent.
thousand
Yeah.
times and then I caught it.
Yeah, so Hearst exponent. So I put a little bit of that as well for the higher time frame to let's say calibrate. Uh, but let's find some time tomorrow, Vajat, if you have, where maybe I can spend a little bit more time on this Hearst exponent thing with you. But I mean, unless somebody has a question, I can quickly show what I have so far, and I mean, it's going to be more of a conversation
Sure.
between me and Vajat then.
No, but actually, to be very honest, me and Bhabhi Jan, so basically Baijan's wife, we were just talking yesterday and we decided that we will force Baijan to take a break. So
Yeah, I know. I ended up in a hospital yesterday.
so he's like sleeping 3 hours a day. He's stopped going out. He's stopped going to the gym to play golf and just sitting in front of a laptop coding and programming. And that madman video does make a lot of sense. If he continues this way, maybe in 2 months' time he will actually turn into that person.
Yeah. No, look, I think I mean.
I gotta say that I was gonna say that resonated really well with me because that's pretty much what I do.
Yeah.
I mean, I'm QL4 too, so it's just like that's my group.
No, I mean, I mean, I had a good corporate career as well before I took a leave from that to dedicate myself fully to portfolio management. Uh, but I used to say it's like, okay, well, this 9 to 7 or 9 to 8, whatever it is, look, I want to get away from it, so I have a little bit of independence and freedom. And now I've ended up working 24/7 almost. So, but in a way, it's fun because when you do something you like doing, it's fun. But one of the things which I've noticed is because I also take the time to answer everyone on YouTube, and then all the emails, and then within the membership area on Discord. And as the community becomes larger, there are more questions and there are more comments, and just replying to everyone takes about 2.5, 3 hours every day. So that's something which I wasn't expecting. So I wasn't counting on. And this is probably where it's like, okay, well, after 2.5, 3 hours spent on answering people, and those are genuine questions. So you do have to find time to answer them. Then you are not left with enough time because I do have my own portfolio that I need to manage. Otherwise, the Chinese are going to be knocking on my door. Uh, and then after that, I mean, all the anticipation that I've built up with new things that I would share, and people are looking for a new EA every month, which is like, well, scalping is old news, time range is old news, RSI Bollinger is old news. Like, when is the next one coming? So during the last month and a half, yeah, I hadn't been taking any time at all. So yesterday I ended up in the hospital. So yeah, under a strict observation regime of how much time am I allowed and not allowed to spend in front of a computer and trading.
Oh, you weren't just joking about the hospital. You actually ended up in
Yeah.
a hospital.
No, I
Oh,
mean,
man.
yeah, in the last month and a half, I mean, and also, I mean, I don't know, Kenley, I mean, how familiar you are with it, but we had the month of Ramadan where Muslims fast from sunrise until sunset. So you wake up at 4:30 in the morning to eat something before the sunrise, and I would wake up, eat something, and then start working at 5. And then I was working until like 1 o'clock in the night because I don't go to bed before 1. So I was sleeping only 2-3 hours, which was fine for a month. But then all of a sudden yesterday, like just my body collapsed. I think it's just trying to tell me that you're not as young as you used to be, and how you still believe that you're probably 28 in your head. You're not anymore. You're 46, so you're on the wrong side of 40 now. Uh,
I understand that.
yeah.
But slow down on the caffeine, right? Just take it easy. Wow.
No, I know. I mean, now my daughter is on the case, so she has put up a timetable for me. It's like, okay, you're allowed to work from 9 to 12, and then you're allowed to work from 1 to 6, and then after that, you're done. And she's quite strict. So I think, I mean, I'll improve. And my wife has now gotten me a gym membership again. So from Monday, my sorry ass is going to be dragged into a gym as well. Anyways, so with no further ado, so I think Bitcoin still works on the weekend, so we can apply it on. So this is what I was saying, Vajad. I mean, remember the higher time frame candles that we were looking at to look back at which way the trend is going, and I put some Hurst exponents to it. So that's what the Hurst exponents is telling me now is like market is trending on the higher time frame,
Okay,
which is
nice.
the yeah. And depending on whether it's trending on the higher time frame or it's ranging or it's reversing, then I also like put on the gradient, I put different colors so that in one quick glance you can see it's like, okay, well, here is my chart, but on a higher time frame, currently the market is trending, or the market is ranging, or the market is more prone to reversing now.
Mm.
And these are the values that I'm using now. So above 65, I'm going it's trending. Below 35, I'm going it's reversing. And in between 35 and 65, I'm going it's ranging. That's what you said, yeah? Those were the numbers that you were talking about, yeah?
Yeah. So anytime it's like significantly over zero point 0.5, that does mean that it's trending. So I think you've taken 0.65,
Mm-hmm.
which does make sense. And
And,
anything significantly lower than zero point 0.5 means that it's in a uh, range bound, like it will keep on reverting to the mean.
and remind me again, I mean, does it make a difference if it's say 70 versus 90?
It does. So the higher the number, the more the stronger the trend.
So in a way, if then I can link it to the color of the chart, but then goes like, okay, well, it gets darker and darker green, something like that.
Yeah.
Or
So the more,
maybe just print a number here saying, well, the market is trending, but say the value is 90 or value is 75, and then in one glance I can see like, yeah, it's doing this.
yeah. So in that case, the darker the color of green, the more it means that the market is going strongly in one direction.
And does it tell you anything about which direction, or that I need to come up with something else?
No, so it doesn't say anything about the direction. It just says that it's going in either upwards or downwards direction. But I mean, just look at the chart will tell you which direction it's
No,
moving
for
into.
example, I mean here on this one. So this is looking at the 1 hour chart. So if I go to 1 hour chart,
And how many candles are you using
a
for
hundred.
calculation? Okay, so roughly 100 candles means that it's trending downwards probably then.
Yeah.
Because if you look at the last 100 candles,
But that's where I'm getting a little confused. Maybe it's this one which is then interfering, because if I look from here to there, then it's
I think it
mainly
would be
ranging.
somewhere from, let's say, if you're looking at 100 candles and this is 1 hour chart, so that's like 100 hours. So that's of like 5 to 6 days.
Let
So
me see.
so I think it should start after
Yeah, so
second.
I'm going time frame for the trading is 5 minutes and the higher time frame is 1 hour. So yeah, it's looking at the 1 hour chart and then printing here. But what would you suggest? 150? Because look, if I just look back visually, because I always believe more in visual stuff than calculations. To me, it looks like a ranging market.
Yeah, and it does show as ranging as well if you look at it. The
Or maybe
yeah.
I don't know. Maybe the way that I wrote the code, maybe I didn't fully specify how I want to calculate it on the higher time frame and then put it on the. Maybe it is looking at the. Currently in the code, it's looking. I don't know. Maybe we can look. Yeah. So currently it is looking on the current chart instead of looking at the higher time frame and then printing it on the lower time frame. So I need to think about that. So yeah, it does. It is ranging. So it does look like, yeah. And here it would be trending, but it's trending to the
But
downside.
it's trending downwards, yes. And these Keltner channels, you've changed it from Fibonacci, or because I remember last
Yeah, I
time
changed it
there
from
was some
Fibonacci.
Fibonacci
Yeah,
involved.
I was looking at the highs and lows of last day, but that really wasn't doing anything for me. So I've gone. I mean, I've just written it. I still need to then on Monday see whether or not it actually makes a difference.
Yeah.
And this is why I'm saying, I mean, tomorrow if you have time, because I'll probably need like 2-3 hours of your time to sit through and just run my logic through it. Because guys, I mean, for everybody's benefit, the way that this EA is supposedly working, or the concept that I had was, and I don't think in terms of indicators. I think more in terms of, okay, what my concept is, which is abstract, and then I look for the best indicator which can give me the best approximation for that concept. So my idea was basically, when you have a very strong movement of price in one direction, there seems to be always a small pullback before continuing in the same direction. And I was thinking, look, I mean, based on certain criteria that I can come up with, if the market is moving in this direction, which say on this candle is going down very rapidly, and then I say, well, if it starts reversing, say a certain number of pips or a certain percentage of the price movement itself, say if this candle is, I don't know, 20 pips, then I say if it reverses back 4 pips, then I'm betting that maybe it will reverse a little bit more before continuing. So in that case, I take a trade on when it starts to move back, and also it's time bound. So if it's quickly moving in that direction, and then I goes like, okay, well, if it has moved, and just randomly saying, if it has moved in that direction 20 pips, 25 pips, and we can look at different criteria of, because if you are applying it to different currency pairs and across different time frames, then the calculation needs to be dynamic. So I thought of first as either using ATR or from the mean a certain percentage, or let's say ATR over the last 100 candles to give me a range, and then a multiplier to say, okay, well, if it is bigger than that within this much amount of time, say if you're on 5 minutes, then in 5 minutes, if it has moved, say, 5 times the regular ATR, then I'm saying it's moving way too quick. So there will be propensity for it to move back a little. And then I say, well, if it moves back 25% of how much it has moved in downward direction, then I take a trade to the upside. And then based on how much it moves back, then I move my stop loss slowly. And then it's a very tight stop. And this is why there is a very tight stop loss, because either I'm right or I'm wrong in the next 5 seconds. Because if it is going down really sharply and it starts to go back, let's say rebound rather quickly, and I take the trade in that direction, saying that, well, what's the possibility that the rebound will stop exactly where I took the trade? Then if it does happen, and if it starts to go down again, then I'm wrong. And the reason I took the trade is gone. So why leave it 20 pips? Why leave it 50 pips? I'm wrong. And in that case, it will hit the stop loss. So that's what my idea was. And when I was writing this, I tried different things. So I started with Bollinger, then went to ATR, then went to percentage movement versus the mean, the EMA. And I'm still trying all three of them in the demo to see which one works better. And I wasn't expecting it to be like 80%. I was more thinking, okay, well, maybe 60% of the time it does do what I want it to do. But the beauty of it is it's very tight stop loss. And most of the time what I'm seeing in the visual test and what I'm seeing in the actual test is that when it rebounds rather quickly. So normally, if my stop loss was 5 pips, I'm getting an average of 6 or 8 pips on the rebound. So that's what was interesting and quite unexpected. But it's still going through the coding, and I mean, look at this, it's already more than 1,000 lines. So there are some bugs somewhere which I currently cannot see. And this is why I'm doing the forward test, just to first see if at least there are no bugs. Because what I don't want is I put it on the store and people download it and there are bugs. So this is what's delaying the sharing of the coding. And also, I mean, 1,000 lines of course to share is probably going to require a 2.5 hour long video, and the concepts are quite difficult as well. All of these Hurst exponents and different ways of looking at. So let's see.
But in terms of the Hurst exponent, Baijan, I mean, I have some observations. I'm not sure if you want to discuss right now. We can discuss right now. Otherwise, we can have a more detailed call tomorrow.
This is great. I actually attempted to code a similar strategy in the past using ATR. It's not a strategy I use today, but I'm curious what your results will be if they're different than what mine were.
Yeah. And one of the things which I think somebody had also commented on YouTube or in the Discord channel, that, well, they have written like 100 different strategies and 2 of them are now working for them. And that's what normally happens, like with myself as well. Is like, I think, I mean, every year I probably end up coding 15 to 20 different strategies, and hardly maybe one makes it to the portfolio eventually. Now my process normally goes, if I have an idea, I'll sit down and very roughly write it, and then I'll run a very quick visual test. I don't believe in backtests, like the results of the backtest. I rather would look at visually whether the thing is doing what I expected it to do. for example, for this one, I mean, if my idea is that if the price is moving way too fast in one direction, at some point in time, it's going to take a rebound, and that rebound is going to be quick as well. So if I capture it on the rebound, I might be in for a very quick, like, soup of the price reversal. And when I ran the visual test, wherever it was taking the trade, it did look like, yeah, it is getting on the back, like on the reverse momentum. It is getting in quite in time, and it is going quite a bit of like in the other direction after I take the trade. So I was visually very happy. So then it merits to take it into a forward test. So this week it has already gone into the forward test. I've seen the trades, and there are certain things which I'm not 100% happy with. So I'll be tweaking it now and then applying it again in the demo. And that will continue for probably like another 2 to 3 months before I mean, just from historical experience. In 2 to 3 months, I will be like, okay, well, now this has seen enough of the real market for me to take a bet on it, and then it gets graduated into a live account, but a small live account, maybe like $4,000-$5,000, and then another 3 months to just see whether or not it repeats itself, and whether or not there is something that I missed in the first 3 months. And then eventually it gets promoted into the proper portfolio.
If you have a 15 to 1 success rate, that's much better than mine. I'm probably 50 to 1.
Yeah. Look, but this also comes from, I mean, I think I started automating my strategy like 6-7 years ago. I think in the beginning, probably it was like 100, 150 different codes before something of even smallest consistent profitability emerged. But I think over time, as you're doing it again and again, you sort of develop an intuition of, you see something visually and then you go like, yeah, this should work. So I do believe this one should work, but let's see. Yeah, Milan.
I have tested, same here. I have tested a lot of ES. The range bound ES I think you coded. I have, I think, 3 to 4, 5 version of it. Different settings, different inputs.
Yeah.
A lot of things. Different indicators.
Yeah.
But yeah, still I'm testing few accounts.
And I think,
And,
I mean, yeah, go ahead.
Yeah, the question is this multi-time frame EA. I think the trades or the duration of the trade is very, very small. I think 5 seconds or that's what and when the volatility comes, I think there's the EA takes more trades than the range bound.
Yeah. No, and I'll give you a brief context, and I'm infamous for telling long stories as answers for very short questions.
Sure.
Which is, I think it was what Vajat, you remind me if I'm going wrong. It was 2.5, 3 months ago when Vajat said to me, "Is like, because I am notorious for avoiding chaotic markets. I don't like chaotic markets at all." And Vajad had the like, okay, well, but let's try at least something during the news events or chaotic events or chaotic news. And then I wrote something and we tested it. But then it's like, okay, well, in the bin with all the other ones that I've written. But that thought is stuck with me ever since, which is, yeah, I've never written anything for chaotic markets. I'm always writing something and always saying is like, avoid the chaotic markets. And there is always news filter in my EAs. There is always RSI filters to avoid the extremes in my EAs. So that was and this goes back to like, the movie Inception, which was the idea was planted somewhere in the back of my head. So I think somewhere subconsciously it was bugging me. And then one of those days I had this like, yeah, but maybe in the chaotic market, I can either try to go with the flow, which, and this is another difference between me and Vajat is Vajat would always go with the trend, and I somehow try to impose my logic upon the market, which is not a good idea, but that's just my natural tendency. So even when the market is in extreme position, Vajat would always go that way. Where I'm going, it's like, no, but it is going to reverse now. And he's like, well, it's not so far. It's like, it is going that way. So, yeah, it will go that way. And this is where even on this one, yeah, it is, well, it has gone that way. So let's catch it on the rebound. But I didn't want to predict it. I wanted to catch it on the rebound. And that's what the thought that occurred to me is like, okay, because I was thinking first, like, okay, well, how do I time it perfectly? But then it came to me like, why am I trying to time it? Let's catch it on the rebound. So let it rebound in a very quick move. And the first thing which came to my mind was like, well, there would be slippage. And this is what I want to test in the next 2-3 weeks is like, okay, well, in different conditions and especially during big news events, how does the slippage affect it? Because if it does catch it on the rebound, but by the time the trade opens, it has already moved like 6 pips from the time when it should have, or the trade should have been taken. What happens then? So that's one area which I still want to see. Yeah, Kenley.
That's actually what I found in my test when I coded a similar strategy probably 2 or 3 years ago. Was that during the time of those spikes, there's slippage and the spreads generally widen as well. So it's just something to look out for. But I'm sure.
Yeah, and I think Baijan had this great idea, and I think this is a theory that I've only heard from Baijan. I don't think that this theory exists elsewhere in the world of trading. And it's actually quite true based on once Baijan mentioned it and I saw it happening in the world, is that there are practically just two states, and maybe Baijan you can add more to that. One is a risk on a stage and one is a risk off a stage. And basically the money flows from one types of assets to other types of assets based on specific market conditions. And I always thought that, okay, if we have EAs for one type of market, we should also have EAs for the other type of market. And that's why I was asking Baijan to see something else, because we would always close down EAs in chaotic markets. But Baijan, yeah, I don't think we've discussed this risk on risk off thing ever in our call. So if you want to expand on that.
Look, I mean, I think what Vajat is referring to is, and this has become more apparent to me or more obvious to me in the last 4 or 5 years, is that there is just way too much money in the world and it doesn't have a home. So it keeps flowing from one type to another type to another type. So like, okay, it went to Bitcoin at some point in time, and then it was taken out of Bitcoin, and then there were the NFTs and all the money. I mean, yeah, digital pixels people were buying. And this is what I see is like, it's just, and also, I mean, yeah, during the COVID time, which was probably the biggest scam ever. I think YouTube is gonna ban me for saying that. I think it's okay now to say things against COVID. I mean, there was a time when you couldn't say.
No, just cut the short.
I think you've been spending too much time on Twitter then. That's the downside of Twitter.
Look, I mean, the biggest wealth and look, I always follow the crumbs, which is, okay, well, who benefited from whatever happened, and then you can follow the crumbs back to, and okay, maybe it wasn't intentional, and it did just leak out of that lab in Wuhan. Maybe it did accidentally, but this is historically the biggest wealth transfer that happened during that period of time. The rich got super rich, and And I keep discussing it with Vajat as well, which is like, okay, well, the world after COVID is a very different world, because before COVID, I remember, people had a decent living. I knew families where only one person used to work and he was able to support an entire family, have a house, pay for the car, pay for the petrol and everything. And what I see now in the last 2 years is even everybody's working non-stop and everybody is struggling financially. It's like, how did that happen? And on the other hand, it's like, okay, well, now the number of uh, like people with $300 billion, like, yeah, that number has grown. Back like 5-6 years ago, Bill Gates with $80 billion used to be like, wow, 80 billion. And now 80 billion sounds like, okay, well, yeah, fine, okay, you're somewhere there. Like, yeah, okay, well, you do okay. It's like, eh. And the way that the money printers started printing money, and the money was going to people who already had money, and this is where you can follow the breadcrumbs. But back to the point. I always back to the point. There's just way too much money in the world right now, and it needs to find home, because there is only so much products and services you can buy and consume. Like, how much can Elon Musk spend in a year? He's not gonna spend like 360 or whatever number of $1 billion he has. So that's just a number in a bank somewhere. It's a number. Um, so it needs to go somewhere. And a lot of people have a lot of money, which is just numbers in a ledger somewhere electronically in a computer. But that needs to find a home. It just can't sit in the computer. And this is why it keeps flowing from one asset type to another asset type to another asset type to another asset type. And the idea would be to follow whichever way the river is flowing, instead of using your logic. If people want to buy a tulip for the price of a house, people want to buy a tulip for the price of a house. Like, yeah, who are we to argue with that? And the other thing which Vajad is referring to is one of the things which I've seen, but this is a bit older as well, is like, it's always in two stages or two phases. The market is like risk on. I call it risk on, risk off, which is when it's risk on, then all of a sudden you will see Australian dollar, Canadian dollar, New Zealand dollar. These all commodity based currencies is starting to do a lot better, and in one direction they will just continue to pump, and then you will see a phase where then it goes exactly in the opposite direction to Swiss franc, euro, and US dollar. And the amount of correlation, at least I've not done calculations, but visually the amount of correlation that I see is massive. And you can if you look back in the charts over the last 3 years, you can see like very distinct periods of 4 months where Australian dollar, New Zealand dollar, Canadian dollar, they're just going unilaterally in one direction. And then you will see them dip in the opposite direction for the next 4 months. And then again, and to correlate it, yeah, there was, during the COVID time is when it started big time. So all of the commodity currencies got thrashed, and Euro and USD were the safe havens back then. But then after that, there was the UK economic and energy crisis, during which time again risk off. Then the Ukraine geopolitical situation, let's call it that, to avoid any YouTube flagging. And
don't start the Twitter things here.
no, and we have a friend from the US as well, so let's be considerate. So the entire Ukraine Russia drama, because again, I'll say it. In my head, it all boils down to, again, it's like, who benefits from it, and it's the I don't know how you call it, military complex, the ones that make the bombs and the machine guns, and I don't know how it's called. Uh,
The
so
defense industry.
yeah, the defense industry. And this is where, I mean, there is always a war somewhere, because otherwise, who needs the defense industry? There is all the, I mean, and following. I mean, there used to be the oil was and then the defense industry was always there, and the banking system, and now the pharma industry has also joined the, like, okay, well, why are we sitting on the, let's have a pandemic every 3-4 years as well. It's like, come up with the vaccines, and like, okay, let's just continue this. But that's just my conspiracy theories, like, do not put weight to it. So then there was the Ukraine, and now with the entire Elon Musk and Trump and the right versus the left drama which is going on, the world has become so unstable that all of the risk bearing currencies, it's stupid to bet on them. I mean, look at Canadian dollar. It's like at the all-time, you historically all-time low, and then breaking some more. Same goes for Australian dollar. Same goes for New Zealand dollar. But that was my risk on, risk off theory. But that has nothing to do with the trading robots and ES. Besides the, and this is what I always say in these calls. Like, look, I mean, I, at least my own personal opinion is, there is no EA or machine learned model or AI generated model that can trade for you always, forever, until the end of times, happy ever after. That just doesn't happen. There are still times, or there are still decisions that what it can do for you is, it can take off the workload from you in terms of not having to sit in front of the computer all day. But you still have to regularly watch what's happening in the market and adjust your EAs to, say, for my scalping EA, I mean, when back in December, it was at bars and 5, now it's at bars and 100, which basically means trade less, or trade only the established highs and lows instead of every high and low which is forming in the market. And that, for me, is by looking at the markets, going is like, okay, well, the markets are extremely strong trend, like like USD JPY was, ever since the Japanese, like, I would call it stupid, but their monetary policy, which made JPY almost as good as a toilet paper over the next year and a half. But during that time on JPY pairs, the trend was extremely strong. So it made sense to trade every new high and every new low. But now it's not that much. So I would rather move it to more established highs. So you still need to make those kind of decisions. So for example, Thursday, I turned everything off because, well, I'm not going to trade this kind of market. And I'll again see the first half of Monday to see whether or not I want to turn that back on. And even if I do turn them back on, do I want to reduce the risk settings on them? Or maybe change the profile a little bit more? If they are that much chaotic, then on the Bollinger, I don't want to trade 4 standard deviation, maybe 5 standard deviation. So those kind of decisions you still have to make yourself. I'm missing Bart today because he always has a monologue to match my monologue.
Yeah, I think we can be like from worker to manager of an ES. I think the manual trader, you should not call it worker, but you trade full day, and with EA you can manage 2-3 workers like that.
Exactly.
And you don't do the work itself, but you manage everything.
Yeah. You come up with, okay, well, this is how I would trade if I were trading manually. And then the machine does it for you until the time that you change your mind again. And you say, okay, now I would trade this way if I were to trade manually. This is how I approach it. I mean, Vajaha's machine learning models are different because those, nobody knows what they're doing. This is the beauty of machine learning. It's like, yeah, it learns, but it never tells.
No, but I think even for those, you need to keep on how should you say that? Make the model relearn. Let's put it this way. So, I mean, if you make one model today and you just leave it for a year, 1.5 year, then over time it will just not be able to adjust to the new reality. So that applies everywhere. And I think your point about we telling or making some adjustments based on our intuition, I think that applies to all the technologies. Even let's say if we have chat GPTs or whatever technology we have today, it's you still have to use some brain, some neurons in your brain to be able to, it's a tool at the end of the day that you need to learn to use. And that's something, even when I was making the machine learning video, that's the same concept that I was talking about, that at the end of the day it's a tool. You need to learn how to use the tool. It can help you, but at the end of the day you're supposed to drive it yourself at some point. Like, it reminds me of a joke when I think Bhaijan told me this joke many years ago. There was a very super lazy person. So let's assume their parents organized everything for that person, that hey, if you need food, press this button. If you need to get your room cleaned, press this button. If you need to get laundry, then press this button. So when they got finished with giving him all the instructions, he turned around and said, who's gonna press the buttons? So if it gets to that stage where you're not even willing to press the buttons, that's a different story altogether.
Yeah.
But I mean, you can automate things just to a certain extent. At the
Yeah.
end of the day, the do need to use
Yeah.
some logic, some mind.
And this is where I am also a little bit frustrated, would be a strong word. Disappointed would also be a strong word. But the entire idea for me to start sharing stuff on YouTube was not to give away EAs and make it a marketplace, which unfortunately it is becoming one. Which is fine. Okay, well, if you want to send money to my bank account, like, yeah, well, any day, anytime, if you want to, I'm not gonna say no to it. But the idea for me was to share more the like, and this is where again I also have now this analogy in my head. Is like, okay, well, here is the helicopter, because I'm thinking of my ears as helicopters. Uh, I'm a bit pompous that way, but here is the helicopter. But well, don't fly it into a storm. Do I have to tell you that as well? Uh, and this probably, and this is what I have noticed in the real world as well. It's like I spent the last 20 years in Europe, between different countries, and when I arrived in Europe back in 2002 or three, it was. Uh, when I landed there, I said like, okay, well, welcome to the free world. And then in 2023, I left Europe finally, and I arrived in Singapore, and I said, welcome to the free world. Because Europe didn't feel like a free world to me anymore. Because you're walking down a street and you see, let's say, a pit, a hole, and there would be 4 signs right next to it, like, don't go into the hole. Like, yes, I mean, I can see. My parents did teach me this common sense to not jump into a hole. But I don't know. I mean, maybe it's the social conditioning which has now made us like, no, everything now needs to be written down and well documented. That even if there is a big pit in front of you, there should be a sign telling you, like, it might be a stupid idea to jump into this hole. But this is what I see also. Is like, okay, well, people are downloading stuff, and this is why I'm a little bit nervous about this new thing to share it. Like, I don't want anybody to have a terrible experience with it. Like, I don't want anybody to wake up and come back like, okay, well, yeah, I put it on a $10,000 account, which I sold my car to. Like, but why did you?
And I think this is one of the best things about whatever you want to call it. If you believe in God, or if you believe in universe, or if you believe in whatever spirituality, this idea that nobody can hand you over success.
Mm.
You so let me maybe go on a little bit of a monologue of my own.
Mm-hmm.
So this book, one of personally my favorite books, and I think it's a favorite book of so many other people as well, The Alchemist, where there was a shepherd who used to sleep in a church, and then he used to keep on seeing this dream that there is a treasure in a desert. So he goes on this whole journey of trying to find the desert. He arrives there, he kept on digging, and in the end he found out that there's no treasure. He was so hungry by the time he got there, so thirsty, and just about to die. And then he saw a herd of people coming in his direction, and that herd saw him digging. So they asked him, like, what are you doing? So he said, I'm digging for treasure. I used to see this dream that there's a treasure. And the guy laughed and he said that I also used to have this dream that there is a shepherd in whatever area, wherever that shepherd used to live, and where he sleeps the treasure is right underneath that. But I never followed it, and he went away. And in that moment, this guy realized, the shepherd realized, that all this time the treasure was underneath me. I just had to go on this wild journey just to discover that it was underneath me. And it was a bit philosophical, but if you look at it in terms of real life, if, let's say, so I'm a big fan of chess. If the best grandmaster in the world comes and tells me everything he knows or she knows about chess, I will not be able to learn it. It just doesn't work that way. The way that learning takes place is that you have to build that neural networks in your brain. As long as, if you haven't invested the time to build the neural network, if you haven't invested the time to make the muscle memory, like if, for example, if a cricketer Sachin Tendulkar comes here and teaches me everything about batting, my muscle memory is not there, even if logically I know how to do it. So it's about that muscle memory, it's about that neural network. And that's the greatest part about whatever you want to call it, again, God, spirituality. Nobody can teach you anything if you don't go on the journey yourself. If I don't spend 10 years in chess, nobody can teach me chess. If I don't spend 10 years playing cricket or tennis, nobody can teach me that. There's no shortcut to success. And this applies to EAs, this applies to trading. If Warren Buffett comes and teaches us how to trade or invest, and he gives us all the knowledge he has, it doesn't mean anything. I mean, we need to spend the time. The gurus or the mentors can help expedite the process, but there's no shortcut. Yeah, so that was my first monologue. Hope you guys enjoyed it.
Yeah. No, and also, I mean, I appreciated the way that you slipped in neural networks into your monologue. His machine learning.
No, because I realized that the whole story about the alchemist part was too philosophical. And then philosophy can sometimes be perceived as just that, philosophy. But there is science backing that.
Yeah.
So, yeah, when you mention neural networks, it becomes scientific rather than philosophical. So, insert that.
Look, I mean, I agree.
Yeah.
Yeah, I agree with that. Like, I mean, everybody that I've seen, I mean, successful would be a very strong word, but let's use that. So, anyone who's successful, I mean, some of the key qualities that I've seen on those people is, one, they don't give up. And it's not give up in a stupid way of trying the same thing over and over again and expecting a different result, kind of stupid, persistent. But more like, look, I mean, if I'm setting out to achieve something, I'll not rest until the time I've achieved it. I'll change my path, I'll try different things, I'll try new things, but I will achieve it. So if you are, or anybody, and because I will post it on YouTube as well, this weekly calls. So for those people, if they hear this, if you are thinking of making a living out of trading, it's a long journey. I mean, no amount of EA's downloads are going to help you. It's a very quick fix. It's a very quick. How do you call it when you take a? It's a hit. Like you take a cocaine sniff. It might give you that, because you download a new EA, you will apply it, and maybe for the next 2 months it makes you like 60. Say for example, if you had downloaded the scalping EA and used it with the settings that I have been using, you would have made 60% gain in the last 3 months. That's what it has done with an 8% drawdown. But would that continue? Who knows? Who knows? And you can get that quick fix or quick hit of euphoria, and that, oh, by the way, now, yeah, I know now how to. It's like you don't. No, you don't. It's just, okay, well, you landed upon an EA which made you that much amount of money in a period of time. But at some point in time, it's going to take a turn to the south as well. It will come. And unless you can learn the patterns in the market and and learn when to tone it down and when to tone it up to capitalize, that's still something that you need to learn yourself. So determinism is probably the key. I mean, I spent probably the first 3-4 years in the market. Okay, I when I started, it was as a hobby back in 2012, and it looked so easy. Like I would be sitting with my family at a dinner table, and before we order, okay, we order, and then I'll take a trade, and then by the time we are finished, I've made some like $150 on that, and it's like, yeah, the dinner is paid for. It looked so easy that I wanted to teach my wife as well. Like, no, this is what you see, this is what you do, and then the money pours in. But that was probably like either the beginner's luck or whatever. But in 2 months' time, I blew up that account. Yeah, and then it was like, yeah, what happened now? And then you try, and then you try again. And but the funny thing was, like, I fell in love with this entire thing. And then it was a long journey of, and again, I will think every 1.5-2 years that now I have learned, and now I know exactly what I'm doing, and then the market will teach me something new. And it's a very cruel teacher, the market. It punishes you first and teaches later. Uh, but the good part that
Yeah,
can come from hearing out these YouTube channels and the mentors or whoever is to learn from their mistakes, because they would be happy to share their mistakes. Yeah, Milan, go ahead.
yeah, I trading, although he has done many trading, and they know that the mindset game is very difficult for a trader, a beginner trader, especially because in markets, if you have 3-4 profitable trades in row, your mindset changes.
Mm-hmm.
And also, if you go like 3-4 SL in a row, your mindset changes.
Yep.
So because of that, the the performance of like the month or 2 months changes differently. In ES, this is I think the one benefit I see, that it doesn't have that emotional changes overall, because let's say I have 10 trades now lost, right? I can't trade with I can trade the 11. I can't take the position because I will be so much in fear that I cannot take the trade.
Yeah.
I will just put the money in the account and just wait for, I think, many signals, and then I just like after I think 1-2 weeks, the emotion goes, the emotion again comes with the greediness. The cycle of this emotion game is very difficult. I have gone through that, but it was very hard, right? So the EA has its benefits, but also I experienced the other thing with EA is that you need mindset of, let's say, the scalping EA you take, right? You put $5,000, right? And it trades 1 month, you just like 10% or 20%, you gain the profit, right? And then you think like, oh, this is making money. You just raise the risk higher, right? And then you just lose a lot of money, right? So I think there is a lot of things like mindset wise that you can apply in both. You need in both traders, EA trader, like robot trader, and a manual trader also. So the the overall thing is, a good trader makes good money. A good trader makes a good robot.
Yeah. No, that's
I
very true. And if I were to summarize in my 12 years of attempts in this market, is the key 2 or 3 things that I've learned is the first one is do not chase profits. Do not even think about profits. Always think about what can you lose, what can go wrong. Always be like, for example, I mean, this new year that I've written, that my entire focus in the forward test or in the 2 weeks is about what can go wrong. I mean, the slippage can hurt me. This can hurt me. That can hurt me. What are the potential risk parameters that I'm not able to even think of? I'm not even thinking about, well, how can it become more profitable? And this is one of the things which I notice in the YouTube comments. Like, there are 15,000 comments about how much profit it makes. There is almost zero comment about, well, what's the risk profile? And people chase after, for example, Gradle and martingale systems because those systems can make a lot of profit. And they give you the impression because, well, if something goes in the other direction, the position is never closed. So there is always this, like, it will return back and eventually I'll close it in profit. And it can continue for a while. And one of the ways that you could potentially also trade Gradle and martingale strategies is if you started with $1,000, the moment it has made $1,000, take it out. So you take out the initial money and then you go like, okay, well, now it's the money that I got from the market, so I'll be happy to return it back if I have to. So you time limit your risk by taking a bet until the time that it's $1,000. So the first one is do not chase profits. Profits always find a way of coming to you if you can stay in the market long enough. And this is why, I mean, most of the stuff that I will share that comes with a way. I mean, the first thing that I look for is like, okay, well, stop loss, and as tight a stop loss as I can potentially put. And this takes me to the second part, which is do not hope in the market, do not predict the market. And this is where I keep saying that if you ask me where I put my stop loss or when I would close the trade, is like the moment the reason I took the trade is gone, there is no reason for me to be in the market. So example, like we were talking about this new momentum thing. If I'm betting that on the rebound I catch it and then take a ride on the rebound a little bit, if it takes my trade but then it goes against me, then even 3 pip, 4 pip, 5 pip, I'm wrong. If I'm wrong, then I'm wrong. Why am I staying in the market hoping that it will go in my direction? So get out. I would rather take the hit, and if the year doesn't work, it doesn't work. If the strategy doesn't work, let's think of a new strategy then, rather than trying to perfect it. So those would be my 2 biggest one that I've learned. And the third one, which I said, I think probably in the first or the second members call, was I've seen a lot of brilliant traders, and it doesn't matter for them how the trades are open. Like, what's the criteria to get in the market? It just doesn't matter for them. Like, you can give them any criteria. It's all about trade management. You could give them the strategy of, okay, we'll flip a coin. If it's a head, we'll buy, and if it's a tail, we'll sell. They will still make profits out of it. It's in the way that they manage the trade. And by that, what I mean is most of the traders, if they go in the loss, they will let it run because they're hoping that it will come back, because nobody wants to book the loss. As long as it's an equity drawdown, it's like, fine, it will come back, or it should come back. And when it is in the profit, they close it down very quickly. And the best ones that I've seen in the trading world are the ones where I think they would be break even to slightly in loss for 2 months, 2.5, 3 months. And then all of a sudden, it's one movement in the market, either to the upside or the downside, which they catch, and they continue to scale in. And I've even seen many times that they would be scaling in where they're now like 5 trades in profit is scaled in. And then the market reverses and then they end up closing at the break even. No emotional reaction from their side. Like, yeah, fine, happy days. One of these days I'll catch one. So it's always about they're looking at like, no, I'm not going to lose money. As soon as I can move my risk to zero, I'll move my risk to zero, and then I'll continue to scale in, moving my risk a little bit, my break even point a little bit higher. And if it comes back and just stops me out at break even, fine. Or a small loss, fine. But one of those days, and this is what I've seen, like 2-3 months, there will be break even to slightly negative, and then one move. I wouldn't say one trade because they continue to scale in. So by the end of it, they're like 14. We do it, or I see most people do it the other way around, where when they are in profit, they will close it down. And when they are going in loss, they will continue to open up more trades. Now think, and I always say, like, there is that guy doing exactly the same thing on the other side. When you were adding to a losing position, he was actually adding to a profit. And we all have seen and witnessed and experienced those moves where it just in the end, like even $5,000 account, $10,000 account, it just blows it up because it just continues in one direction. And you keep opening up a trade thinking that now it will turn back, but it doesn't. If you were to take the trade in the opposite direction and continue to scale in, one of those days that does happen. But it requires a lot of patience. So that would be the third point that I would make is trading requires a lot of patience. People are looking for, like, yeah, I mean, I get so many comments and emails like, yeah, I applied the EA, it's 4 hours now, it hasn't taken a trade. Like, and like, yeah, it hasn't. I mean, my RSI Bollinger EA since the beginning of the year to end of March has taken, I think, 9 trades in total. But I'm very happy it hasn't lost money. I mean, it hasn't made money. It's like probably like 2% profit in 3 months. Like, yeah, happy days. I'll take 2% profit in 3 months over 4% loss. And this is the okay, I'll add one more point to it, which is the fourth thing which I've seen works is like no single strategy is gonna work for you. You need a range of strategies, all working in different ways, because then it's diversified. So not only you're diversifying across different asset classes. So if you are going the fast moving or risk on currencies, as I call them, the Australian dollar, New Zealand dollar, Canadian dollar kind of currencies, then you also have to have some strategies that work on risk off currencies like Euro and USD and JPY and CHF. But then go to indices as well, go to oil, go to gold, go to like other asset classes, but then also have a range of strategies. I mean, for example, in my case, with 14, 15 years, and Vajat has 5 or 6 machine learning models. In a given quarter, probably 8 of them make money, 6 of them are break-even-ish, 5 of them lose money. So on the rules of averages, it does make, like, normally every quarter is profitable. But I've had quarters, like 2 quarters in a row, even where, well, when we lose money, we don't lose that much. That's what my focus is. Always, like when I lose money, I don't. And Sander is not here. He was promising me a couple of months ago with his new strategy that he's going to have 10,000% profit or 1,000. There is a post even in the channel where he's like, no, I'm going to make 1,000% profit. And my reply to him was like, look, forget the profit. What I want to see is you commit to me what would be your maximum drawdown in the next 3 months. Commit that to me. That I wouldn't have a drawdown more than 5%, 6%, 10%. I don't care about the profit. But he was like, no. I'm gonna give you I'll show you that 1,000% profit, which he got up to, I think, 200% profit in a month or month and a half. Which then by the rate of compounding, and he was bloating. I was like, yeah, huh? Look, here I'm coming. And then his, I think 1 week ago in the admin corner, he posted like, can you remove that post because that account is blown? because the euro Australian dollar and yeah, it took a it literally dropped like a knife for probably like 4 or 5 days consecutively. Which is back to the point. It's like forget the profits completely. I mean, I'm very happy if in a quarter or even 6 months my portfolio has made 0% or 2%, 3% profit. I'm very happy with that. What I'm not happy with if I see uh, a drawdown of more than 4 or 5% overall in the portfolio, where I'm not taking that excessive risks. Also because I mean I'm trading for the Chinese, and you don't want to mess up with Chinese. Yeah.
Does the black van show up in front of your house if you mess up?
Yeah.
Yeah,
No,
I have
I,
seen one.
I think,
I
yeah,
have seen a
go ahead.
trader. I have seen a trader. I have talked to them. Very very high experience in just forex trading. And he has also a video like he just flips the coin and say like buy or sell, and then he does that buy and sell, and then just uh, manages the position here and there and just get out in profit or break even.
Yeah. No, the best
And no,
ones.
actually, it's a very
Bajaj,
valid
just
point.
one more point that I let me make, and then you can speak, which is to what Milan said. It's like the best ones that I have seen. Um, they get out of the risk in the least possible amount of time.
Yeah, that's
Either ways,
very
either they will close down the position in a loss, or if it has moved in their direction, then they will move it to break even or slightly above. So they get out of the risk as quickly as possible in the least amount of time possible. That's what I've seen the best ones do. Go ahead, Vajad.
No, I was just adding to that point about basically risk management. And I think in one of the earlier calls as well, Baijan, you mentioned that I think you gave the example of cricket, and for the benefit of I think Kenley probably wouldn't know too much about cricket, but the idea was that if you as a batsman stay on the crease for too long, runs will just come. Which means that in sports, Kenley, there's cricket. There's this idea that there's a batsman. If the batsman continues to play non-risky way, they will accumulate the score or the runs over time. And I think when it translates into stock markets, I think if we look at the simplest of assets, maybe an index, which goes unilaterally up, like there's only one direction that index can go in over the next 5 years. So if you manage to stay in the market, there's absolutely no way that you're going to lose money, even if you're the worst trader on planet Earth. And as you're saying, even if you're just tossing the coin, if the market is going upwards, you will go upwards with it. And with some leverage, if your leverage is, let's assume just very minimum 2x, Nasdaq generally makes 15% per annum. If your leverage is 2x, you still make 30% per annum with basically coin tosses, if you can stay in the market. So the biggest point, going back to Bhaijan, the points that you were mentioning, and maybe I just added one more point to it, just to emphasize on the point of how simple it is to make money if you stay in the market, especially because there are some asset classes which go just in one direction. Like how can you lose money if you stay in that asset for 5 years? It's just not possible. It's just that you get blown out of the account, you blow up your account, and then you're out of the market. What Warren Buffett once said, anything multiplied by zero is zero. So once you've gone out of the market, you've gone out of the market.
Yeah. Which is also, it's like, I mean, and it's just funny that the very first members call that we had, and I posted on YouTube, the title was risk, 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 risk. And then we had the second one. And when I was looking for, okay, well, what should be the title that came to my head because of the discussion was risk, 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 risk. And then the third one, and then the fourth one, and then the fifth one. And even today, I mean, if I were to title the discussion that we're having is like risk, risk, risk. But it's like, what else is there? And there are many different ways to reduce the risk. Like I'm saying, I mean, you can try to time bound it, that I'm taking that much risk, because I also see a lot of people taking the, okay, well, here is the stop loss. As long my stop loss is not hit, so I'm still in the market. Like, but why not time bound it as well? It's like, okay, I give my trade an X number of hours, an X number of days, depending on how your strategy is and what time frame you're using. If it doesn't happen in that much time, it's like, why are we now hoping that it will happen in the next 8 hours? So there's ways to time bound it, there are ways to price bound it, there are ways to diversify the risk through different asset classes, and also the ones that go against each other. So when one is trending, the other one would range or go in reversal. And then also having multiple, and this is why, I mean, the new video that I've posted today is like, okay, well, let's look at the famous strategies from YouTube and code it. Maybe, I mean, if we take 50 of them, maybe one of them is good, and I will add another EA to the arsenal. And again, I'm not looking for a similar strategy as I already have. What I'm looking for is something which is different. Because that will then complement the other EAs in the terms of, like, when this one doesn't work, that one will work.
I have an idea. Can you just tell me if it works in long time or not? Okay. So if we combine a lot of indices like Europe, USA, Japanese, Australian, every index, right? If you buy all at once, right, and you wait it like 2-3 years, does it, although it's profitable, but does it make, like, manage all the assets properly or not?
I think pre-COVID, it would make sense to me. Post-COVID, what I see is every index is a replica of all the other ones. So when Dow goes up, Nasdaq goes up, and S&P goes up, and DAX goes up, and Japanese go up, and Italian, everyone is going up at, okay, fine, within a smaller time frame, like for a week, 2 weeks, they might go differently. So one is going up, but the other one is going down. But if you zoom out a little bit, what you will see is exactly the same thing happening across the entire world. Which goes back to my earlier theory of, like, yeah, the money needs to find a home. So when it comes out of the indices, it goes into gold, and then it goes into other stuff, biotech and whatever not, and Bitcoin. Then it comes out of Bitcoin and goes back somewhere else. But to me, all the indices look like one index currently, at least. I mean, for the last 2-3 years. Before, I believe it used to be a little bit different. Pre-COVID. Post-COVID, I see them exactly the same. The only thing now, I mean, and this is why I've stopped Nasdaq and I've gone to Dow Jones and DAX, and solely because the spreads on DAX are currently lower on my broker. That's it. Otherwise, I mean, I don't see any difference between the two. And they're pumping money into the indices. So while I agree with what Vajat is saying, is like, I mean, and historically, even if you had bought Nasdaq or DAX, even on the all-time highs every time, you would still make money, because you would be in a drawdown for a very long time, but eventually it beat every all-time high. But I don't know which way it is going. I mean, yeah, the money printers are still printing, so it will continue at the expense of inflation and normal people like us feeling the pressures of it, while the money accumulates into stocks and assets. But this is another one which I always say, like, look, money, no matter how you do it, it will always find a way back to the rich. Because let's say, Milan, if I give you $1 million today, what are you going to do with it? There are a few options. You're either going to go buy a house. If you buy a house, who are you going to buy it from? From somebody who's already rich and has a house. So back to the rich. I'm talking about the currency, the paper money only.
Yeah.
It will get back to the people who already have money. Or you have the option of, okay, well, I'm going to go invest in stocks. Who owns the stocks? Who are you going to buy the stocks from? And again, it's
Yeah.
super rich people. So the paper currency that I've given to you, 1 million, that again goes back to the rich. Or you're going to put it in a bank and like, okay, I'm going to put it in a saving account. Well, then it goes to the bank. And what are the banks going to do with it? They're going to give it to the super. So no matter who and how you give the paper currency to, let's say, and this is how the system is entirely set up, it always will find its way back to the people who already have the money uh, and the asset classes. So I don't know. I mean, these fiat currencies at some point in time, I mean, logically, it makes sense that they will break down.
Yes,
But
yes.
on the other hand, we've been talking about that breakdown and that, like zombie apocalypse for God knows, like 50 years now. I mean, there was this huge financial derivative market that sprung up in the 80s, and everybody was like, look, I mean, nobody even understood what those derivatives were. But those were selling like hotcake, and they were just accumulating money on top of money. And then 90s, and then the 2000 with the housing market and the entire mortgage. I don't know how you call it, where they put up all the mortgages together and came up with God knows what derivative. And it is becoming more and more complex with all those derivatives. Like now, you cannot even understand what those are. Like all these in new indices and indices and derivatives in the market. Nobody knows what they are. But somehow this house of cards continues to stay. So I'm not going to predict a doomsday, but somewhere in the back of my head, it doesn't make sense. Like, how long can this happen? But then, as long as all the central banks are together on it, I think it can.
And then if you add to the fact that, let's say, when retail traders or common people, they go bust, nobody comes and bails them out. The minute it happens to the big companies, there's always this discussion of too big to fail, and there will be a domino effect, so let's save them. So even if you fail, like if you're a really big company and if you fail, if you're a really big bank and if you fail, you still cannot, like, you will be bailed out, you know that. I mean, for most of them, I mean, not always, but in most cases you do get bailed out. In fact, even what you were talking about earlier regarding COVID, somehow they just think that that trickle down thing, if you make the rich richer, the money is going to flow down. It doesn't really happen
Yeah.
always.
Yeah, the money flows up, not down. Anyways, guys, I mean, a very long call, and I am under strict observations and a strict timetable. So, I mean, the discussion is interesting, and I mean, me and Vajad, when we are talking normally, I mean, it's like 6 hours later, and my wife normally says like, yeah, I mean, the pigeons have laid eggs on your head, and you have a nest on your head. It's like, yeah, and there are spider webs everywhere. Uh, because these ideas and discussions, they just continue to flow. But I mean, it's me and Vajat. We can continue on this call for another 5 hours non-stop, but I don't suppose that that's something that people are signing up for when they're clicking the, yeah, I want to attend this weekly call.
No. They are ready to fight for long.
Well, I think it's great. So I enjoyed the conversation. This has lasted almost my entire walk, so thank you.
Yeah, no, happy to have you here, Ganli. And again, I mean, look, and this is what I post on YouTube as well in my comments is like, look, I mean, whatever 2 cents that I have, I'm not a guru. I'm not claiming to be somebody who, like levitates above everybody else. I don't walk on water. I don't turn water into wine. But these are just my opinions and my ideas and my views for whatever they are worth. Guys, then enjoy the evening or night in India. Have a safe one, and see you guys hopefully next week.
Yeah,
Thanks.
see
See
you,
ya.
see you
Have a good week.
guys. Bye bye.